Financial management. The Golden Retrievers needs $220,000 startup investment. They need to secure a loan of $160,000. Both partners, Michelle Seals and Destiny Fetters, will invest equally $60,000 each, $30,000 each to startup funding, $30,000 each towards accounts payable/operating account. The identification of risks. The product risk is that there are already established companies offering similar services, so it may be harder to get customers to opt in for our all-inclusive services. The market risk is that the company needs to obtain a sustainable amount of customers quickly through the proper marketing channels, or the company could fail quickly. The competitive risk is that we will be entering a market that already has close to 100% of the market shares, so we need to promote the uniqueness of our company. The financial risk will be to have competitive pricing that will gain and keep loyal customers and still generate a profit, with little room for error in the beginning. The first year cash flow shows us that the Golden Retrievers cannot expect to start generating a profit until the third month. By the end of the year, they should expect to receive approximately $35,000 a month in cash receipts before expenses. The second year cash flow continues to show slow but steady growth throughout the year, with cash receipts totaling nearly $38,000 a month by the end of the second year. The third year cash flow will continue with the same trend of slow and steady growth throughout the year, with cash receipts totaling nearly $42,000 by the end of the third year. A comparison of the income statements for the first 3 years shows us that with steady slow growth, the Golden Retrievers can expect to almost double their net income after taxes from their first year to the second year, and then from the second year to their third year, have a net income increase of about 8%. The balance sheet comparison for the first 3 years shows us that the total assets from the first year to the third year will almost double due to the cash receipts. The long-term debts will decrease by nearly $48,000, leaving approximately $160,000 left to pay over the next 7 years. The financial summary. Michelle Seals and Destiny Fetters will invest $120,000 together to the startup costs and operating costs. A loan in the amount of $160,000 needs to be secured, payable over 10 years with an interest of around 5.5%. The total startup costs are $220,000. There is a moderate amount of risk associated with the business. Similar services in the target market we need to create a uniqueness with competitive pricing structures to attract customers and generate a profit. The cash flow statement shows steady, slow growth. The company should start generating a profit by the end of the third month. According to the income statements, the Golden Retriever shows to profit around $150,000 that they can use to pay down the first loan, to reinvest, or both. The balance sheets look good and show that the Golden Retrievers should have more than enough equity to sustain expansion and growth for the future.